Good morning, everyone. Welcome to our Thursday morning trading room. Hang on a second here. I will get the screen share happening. There we go. You should be able to see my monitor now. So yesterday was an interesting day here. I was just looking at the market overall. A steady progression higher, even though it was kind of a rather quiet progression higher. The market not really moving with any real pace. You can see from these bars right here to right here, that took about an hour and a half to complete. So there was a trend in play. It just took a long time to get anywhere. But overall, the market did finish strong, and you can see that the overnight peaked at around 58.15 before falling off a little bit. And we find ourselves starting the day pretty much where the market closed yesterday. So no opening gaps to deal with. I do believe the market is still getting a little bit of a bearish slant to it, and you can see here the eagle has already crossed over on the cloud. The cloud is flipped. We're retesting the hard edge, and we may well come out of this with a sell signal. The hawk also already producing an early sell signal here with the green bar sell. Now the green bar sell, here's an opportunity. We can take a second push on it. Oh, actually it looks like they're flipping that around and coming out with a first micro-macro cross higher now. Oh, you're going to give me a chance. What time is it? Oh, we're only 3 minutes in. You know what? I'm just going to wait a few moments here. I've shared with you before that when I trade, I don't mind looking at the opening range, but very often I'll just come into my office at the top of the hour to remove a lot of that temptation to try to jump on board early. Pardon me, so we'll just hang with it here for a few minutes. Okay, we're definitely getting a little bit more of a bullish push here in the hawk and the falcon, whereas the eagle and the raptor both looking a little bit more bearish. Okay, so the raptor now, here I'll focus a little bit more on the raptor. I know there's a few more raptor traders in the room. We are going to get matching signals in the other tools as well, so you're not really going to miss out on much here. You might view this sideways mess as a 4-arrow consolidation. If so, you could look to buy on the next push higher. Oh, it's still only 5 minutes into the trading day. Oh, Eric, so much for waiting. All right, so here they go. We're going to give this a go, and I'll leave my break-even trigger in play, but I'm going to delete my profit objective. Testing the waters with a single contract here to see which way the market might be inclined to go today. So the Falcon also gave us a trend change signal right about the same time we were producing this macro pullback signal. The Raptor not quite into a proper cloud crossover signal yet. However, if it drifts a little higher, the cloud crossover signal, that's the #1 signal. So when the clouds change direction, we're going to be on the lookout for that signal. And what we want to see is we want to see the clouds cross over. There will be a pullback during that crossover period, and then we're going to look for the new trend to resume. The cloud crossover signal is essentially a trend change signal. The market's trying to change direction. And of course, we're still here in the hard edge, which is a little problematic. Ooh, could be a lot problematic. Just got a green bar sell signal here on the Eagle. That tends to be a pretty decent sell signal, and here on the Raptor as well, getting the hard edge sell signal. Given the sideways kind of choppy nature of the market, you may be inclined to take advantage of a second push entry opportunity. And all that means is we allowed the signal to engage, then we watch the market to retreat from the signal so that we know the current limit that the buyers and sellers are prepared to make as far as price goes. What you can do is you can enter beyond that point. Ooh. All right, so I'd better get, oh shoot, they just went past me. Okay, I'm going to look for a little bit of a reaction here so I can do something with my stops on my hawk trade. If the buyers show up, this is going to be their last chance to get get the market to go higher. So what's happening right now is we're watching the market test both sides of the support down here at the low of the morning, as well as some of the overnight resistance along with yesterday's highs. All right, here they go. Come on, let's get a little bit more follow through on that. I might be hoping beyond hope to get more follow through out of this market today. What I mean by that is maybe I should just take the profit when I have it. Yikes. All right. So I'm going to roll my stops now. We're going to go a little bit below the swing. And I don't want it right on the swing, so I'll give it a little bit. There we go. Well, they're actually picking up the momentum a little bit, it looks like. Back to the highs, and they're stalling a little. Come on now. Almost to the break even. Oh, come on. Oh, really? All right, we've hit the break even. Come on. After all this. Well, we would have found the profit objective, and we're just kind of stumbling a little bit there. There we go. Come on. Anthony in prediction mode here this morning. Anthony says the NASDAQ will drop to 57.73. All right, folks, you heard it here first. I do my best not to second guess where the market will go. Rather, I find trying to react to what the market is doing tends to be a more favorable way to trade. If we can ride out this last little swing right here without getting tagged at break even, there is a chance that we could see a little bit more of a rally. Oh, I see. Anthony says I'm aiming at a pivotal point. Well, I might have to just give them a little bit of a push higher here to get them over this 5,800 area. That seems to be a bit of a stumbling block. Come on, get up there. You can do it. There you go. Come on. I'm using the mouse to influence prices. This is the Magic Mouse from Indicator Warehouse. It's still in beta version, so it's not available for sale just yet. But it does allow you to actually influence the market price by pushing prices higher. We'll see how many emails Adam gets after that. ahead, email him, ask him about the Magic Mouse and when it will be out of beta testing. And then I'll get a phone call. What have you been telling people in the trading room? Well, we're getting a little bit upside momentum here. We've kind of been tracking to the upside since the open, the market opening down here. One push higher. This is now our second push. I wouldn't mind trying to get a little bit more out of this before I snug up my stops even more. They've hit just shy of 5,800 here. Somebody is going to try to take the other side of 5,800. Is Tony in the room? Tony, throw in a order for like 1,000 or something at 5,800. That'll get the market to get on the other side of that. 1,000 cars, you can afford it. Here we go. There we go. Thanks, Tony. I knew I could count on you. All right, I'm going to move into parabolic mode now. Change my stop strategy. And as this progresses, if the parabolics still aren't tight enough, I may move to something like the bar high low, which is more aggressive still. What have we got in open profit? Will we see one more swing? Come on. There we go. So the nice thing about the parabolic strategy, if you're, we've got all these different stop strategies here to choose from, and people are always asking me, Eric, which one is the best? Well, there is no best in trading. Really, you got to get that away from that mindset. Some things will work better than others, and that always changes. What's working well one day may not work well the other day. But what is nice about the parabolic strategy is that when the trade first develops, you can see the stops tend to be a little bit looser. And then as the trend is in gear and maybe starts losing momentum, the stops will come in a lot tighter. So it's a great strategy, I find, for helping lock in open profit while still giving you a chance to run the trade out higher still. All right. Oh, there we go. Oops. The bar high low is useful in that respect as well, because it's going to jam your stops in really tight, or as tight as you choose to make it. when I move to the bar high-low strategy, I tend to already have some open profit that I don't want to give up, which is why I will default to that one many, many times. The other strategies, our ATR strategy, as well as super trend and chandelier, are all ATR based strategies. You can see that the ATR and the super trend actually follow each other fairly close. The only real difference is that super trend has a moving average component to it to help smooth it out. The chandelier, which is the one I have displayed now, is also an ATR based strategy, and you can see that it's a little bit more conservative. It keeps your stops a little bit further back. The swing high-low strategy, of course, is self-explanatory. The moving average strategy, you got a whole slew of different moving averages here to choose from. Percentage strategy is pretty interesting. It's based on a percentage of the market volatility, the market ranges, and it too can be adjusted to be a little bit more aggressive if you're looking to keep some profit, a little extra profit. But here too you can see that it doesn't really differ that much, say, from the ATR strategy. The idea is to find a strategy that seems to be following the market pretty well, so it allows you to ride out some of the swings that might be coming your way. And you can always adjust it as the trade goes on. If you're not really happy with how things are progressing, or you want to protect more open profit, you can always adjust the trade. So let's see, got stopped 58.01.75. Not bad for a little single contract trade. It looks like the market's picked up a couple extra points, pushing as high as 58.08 now. For you Raptor traders, here's that cloud crossover signal that we were waiting for. And that too has had some nice follow through. So you would have at least found your profit objective there. Same thing with the Falcon signal, the trend change signal here in the Falcon. Got an early trend change signal here right out of the open, both of which, of course, following through. Absolutely, John. I have nothing but time. John says, Eric, will you review the OCO order in the Trade Manager when you have time? Okay, the OCO order stands for one cancels other, and it's this little tab right here. When it's blue, it's on. When it's grayed out, it's off. You'll use the OCO order usually when you're trying to bracket a market, and you can place as many OCO orders as you want. You just need to remember that unlike the orders that you might be using down here, your OCO orders are live the moment you put them on your chart. So for that reason, we're not using these tools down here. Rather, we're going to right-click on the chart and then select our buy order or buy stop limit order above, and we're going to select our sell order below. Now you notice these are paired. So they're both marked OCO2, OCO2. Because these orders are live, you can place them away from where you actually intend them to go and then bring them in. Now you can have more than one OCO order. If we toggle this and you do it again and you enter a sell order and you enter another buy order, you'll see that these are now matched OCO3, OCO3. And these two are live, so you can place them wherever you want. Excuse me a second. Had a sneeze coming on, sorry about that. If you have a stop strategy enabled, once your OCO order fills, you will automatically get a stop in play. However, given the nature of the OCO order, you will not get a profit order. Now, to that end, you can also place profit orders with an OCO. So let's say you were going to buy one of these orders and you're going to, here, let's delete that. So notice when I delete the one OCO order, the other order that was paired with it is also deleted. So let's say our plan is to buy at 58.21.5 or sell 58.83.50. Those are our entry orders. I've toggled the OCO and now I'm going to place profit orders. So let's say I'm going to take profit up here and I'm going to take profit down here. So I'm going to use the limit orders for taking profit. So now if the market heads higher and hits my OCO order, this will be my profit taking order. So when this buy order is hit, this sell order will automatically cancel. And so long as my trail indicator box is checked, I will get a stop strategy, and I'll also have my profit-taking order in play. If you're using your OCO orders like this, and you're at the top end of your chart, sometimes when you try to drag it, all of a sudden you'll find your chart resizing and it's uncontrollable. Before you do that, grab the price axis here, left click it, and just give it a little pull. You're going to see this little box with the letter F print, and what this is this is your auto format. So when I click that, it will automatically format the chart, but if I need to make some adjustments and I don't want the chart to resize itself, I can grab that price axis, left click on it, and just kind of pull down on it. That will lock it. So now I can move my orders around without the chart jumping all over the place. And that is everything you've ever wanted to know about OCO orders. And then some. That's probably a little bit more than you wanted to know. So we've definitely got a bit of a bullish bent today. I don't know. I had a modest winner out of the open there. I don't know if I want to take another trade. Yeah, thanks for coming out, everyone. That's it for today. See you tomorrow. Honestly, when you're trading, a lot of people, when they're trading, they don't realize, you don't have to be glued to your computer all day. Very often within the first hour of trading, you're going to get enough opportunities that if you're in profit, it's like, well, why do I want to hang out here for the rest of the day? I do know people. I know one person, he's, I call him a cyborg because he's always got his computer with him, and I do mean always. He trades every waking moment, and I'm not sure that's healthy. And then I know another fellow who he trades Forex, he sets his alarm to check his charts every 4 hours. Yes, that means in the middle of the night as well. Every 4 hours he will get up and check his charts because for you Forex traders, you'll be aware that a lot of the currency markets move on a 4-hour cycle. It's a banking thing. I don't know, I get up, my bladder's the size of a walnut, I get up enough at night, I don't need an alarm to wake me every 4 hours. I've hit that age. Oh dear. Something for you young'uns to look forward to. All those things your parents told you about, I hate to break it to you, but it's all true. Well, we might be in a little bit of a retrace mode here now as the market tries to drift back perhaps to the hard edge here on the Raptor. Maybe come back even to the median line. John says, welcome to the club. Yeah, thanks. When the hair leaves your head and goes down your back and comes out your ears, that club? Oh dear. Fun and games. Okay, well, technically, this is going to be a test of the extreme, in which case we may see a counter-trend signal. That's the number 2 signal produced here on the Raptor, the soft edge sell. I don't know if I'm going to jump on board. I could see a retrace here to the soft edge, pardon me, the hard edge of the Raptor. We stumbled a little bit at 5,800, so I'm not sure the market's going to get much past that on the way down. I do have a tendency, if the market is paying off in one direction, to try to give preference to those types of trades. So in this case, the market paid pretty well on the buy side, so I'm going to give the buyers a little bit of a preference today until proven otherwise. So that might have been the move of the day. Wow. Welcome to the summer. All right, so there's that number 2 signal that we were anticipating here on the Raptor. Oh, actually getting a crossover on the Falcon. This first micro-macro cross was not in sync when it printed here on the Hawk, so don't get too excited about missing that one. The macro line was still gray. Quick trip to the hard edge here, and I'm wondering whether that was just to entice a few people to hit their sell market buttons. All right. That's a stronger push to the short side than I was anticipating. All right, so the seller's actually pressing pretty decently here. I thought for sure it was going to hold up at the hard edge and perhaps give us another bounce, but maybe this is all that we're going to see from the retest. So we're going to get a possible cloud crossover now to the short side on the Raptor. That's what your Raptor trader should be looking for. We did get another first micro macro cross signal here on the Hawk. The Eagles really conflicted this morning. It's all over the map. Can't get in enough of a trend mode to actually produce a decent signal. But trend mode coming up in 7 minutes time, according to the trade forecaster, so that might change. Peter writes, good morning, Eric. Well, good morning, Peter. Peter says, for the last few weeks, I've mentioned that I'm sticking to my 3 trades a day. So far, up $3,100 for the month. Fantastic, Peter. That's great news. Peter says, lost a little bit yesterday because the morning was slow after the big run-up Tuesday. My question is, do you reduce your trading after a large move in the market or just shift to scalp mode, which I have found that I'm not good at? Great webinar yesterday. Well, thank you for the compliment, Peter. You know, that's a very good point because it wasn't that long ago. Well, okay, wasn't that long ago. I'm getting older, time is going much faster. About 10 years ago, you can judge for yourself whether that was long ago or not, the market would tend to have consecutive rally days. So if we had a strong day yesterday, we could probably expect a strong day today as well. Now, it seems that if we get a rally day, then the next day is almost certain to be flat. So in that respect, yes, I probably would try to adjust my profit objective a little bit. I probably would be a little bit faster with my stops. Even during the day, as the day progresses, I tend to adjust my trading a little bit. So for instance, the very first trade of the day, you'll very often see me try to run it out. Why is that? Well, that's because if the market has any momentum at all, it's probably going to exhibit that momentum early on. Certainly within the first hour of trading. After that, you've probably noticed that from the noon hour on, things get a little bit quiet, a little bit sideways. Most times, of course, there are no absolutes in trading. There are some lunch hour sessions that the market just goes crazy, but for the most part, things will be relatively quiet until about an hour before the market closes again, at which time everybody says, okay, I got to do something with my position, so they get out or they set up for the next day. So yes, like if I was looking at taking a trade now, I would probably, okay, so we're getting something resembling a cloud crossover signal here. It's a premature cloud crossover, but let's say we're going to take this one. I would take this trade with a profit target. I would not try to run this trade out as I did earlier. Why? Well, because we're already an hour into the session. We've probably got another half an hour, maybe another hour at the outside before the market kind of hits that sideways lunchtime skid. And I think they slipped me a tick here too. They did. Oh, they slipped me 2 ticks, these stickers. All right, so this is now a trade that I would, it may well, fall off the map. Wow, what did Anthony say earlier? He was looking at 57.70 or 73, something like that, as a retrace point. And the market may well head down there, but given that we're already past opening range, we're getting closer to lunch hour, I would be inclined to take profit now rather than try to run it out. But that's an excellent question. Piotr is asking, Eric, can you please explain the difference between the Raptor and the Falcon? Okay, the Raptor is essentially a hybrid of the other 3 trading tools. So the Raptor incorporates elements of the Hawk, the Falcon, and the Eagle into one chart. Why would we do that? Well, because you asked for it. Actually, we had a lot of people saying, yeah, I love the DTS system. Can you put it on one chart? I don't want to watch 3 charts. Can you please put it on one chart? That was actually the impetus for the Raptor trading system. So the programmers got together and they figured out a way that they could smush everything onto one chart. The Raptor is also more customizable than the regular DTS birds. These birds, the programming is pretty much locked. The only thing you can change really are the brick sizes. The Raptor, on the other hand, you can change cloud sizes, you can change the parameters for how the bars are calculated, and a few other things as well. The primary signal generation on the Raptor is the Falcon. So that's why very often you're going to see when a Raptor signal prints, you're also going to get a corresponding Falcon signal. You see here on the Falcon, we have the late filter entry signal, and that happens to coincide with the cloud crossover signal on the Raptor. So it's not like you're really going to miss any signals. But because the Raptor also incorporates elements from the Eagle and the Hawk, you're sometimes going to generate signals on the Raptor that you won't get on the Falcon. Primarily the trend change signal, the counter trend signal, the soft edge buy and sell. This is because of the Hawk programming that's a part of the Raptor. You're going to get this counter trend signal develop. The clouds, of course, are borrowed from the Eagle, and the whole Eagle trend trader is programmed here into this bottom filter to give you your directional bias. So, which is better? Again, there's no better. There's only, what's best for you or what's working for you. And I always use the analogy of a hybrid car. The Raptor is like a hybrid automobile. It's the Prius of the trading world. Will it get you from A to B? Yes. Will it get you from A to B as fast as a Corvette? No. Will it haul as much as a Ford pickup truck? No. But does that mean you can't shove your bookcase into the back of a Prius and move it to your friend's house? No, of course not. The DTS tools are specifically designed for each of their environments. So in that case, the Hawk is more like the Corvette or the Ford pickup truck in that it's designed to do just one thing. The Raptor is designed to do many things or more things. It's funny, a lot of Raptor owners, once they start using the Raptor, they see the advantage of the DTS system and they'll buy the rest of the DTS package. A lot of DTS owners will see the advantage of having the Raptor and add the Raptor to their system as well. So it's kind of funny how that works out. You saw that first trade that I did this morning. It was on the Hawk because, well, the Hawk was giving us the first signal, which is what you would anticipate from a scalping tool, right? The scalping tool is going to be a little bit more responsive to the market environment. Well, I guess Trade Forecaster nailed that. It was bang on with trend mode, only going to last about 15 minutes, but we did see a very nice decline there, both off this counter trend signal and the cloud crossover signal. Sure, Piotr's asking, thanks Eric, one more thing, can you please say something more about price action? Price action, my favorite trading subject. While you can use different charting styles for the DTS tools and the Raptor, I have to say I really like the indicator warehouse mean Renko bars because they show you very plainly who is in control of the market. So for instance, up here when we had this counter trend signal forming, we could see the buyers running out of momentum. We had this little run up, buyers making a new high, coming down, a little bit of a retrace. We should have every reason to expect that the buying should continue. Why not, right? It's in an uptrend. However, once we saw the price fail or the rally fail and start heading the other direction, that opens us up to a counter trend opportunity. It's also why this number 3 signal did not have as much follow through as it normally would. When you're looking at this trade developing here, what are we missing? Well, we're looking for a better retest of the low, and that's what this number 3 signal was giving us. It was saying, hey, we're in a downtrend. The market just opened. We had a little bit of a rally, but the sellers are going to try to regain the overnight downtrend, which rarely happens, by the way. If the market has had a dominant direction in the downtrend or in the overnight, it will tend to reverse that once the market opens. And this is actually a very good example of that. But, you know, you probably still could have managed your trade a little bit more aggressively. We'll see here in a moment whether it got down to the profit objective before reversing. No, it reversed a little bit early and then gave you one more chance to roll your stop before heading up. But whenever you see these swings develop, whoever made the last swing controls the market, at least for the short term. So I'm always watching which way the market is swinging. I'm always watching for tests of the extreme, either the highs or the lows, signs that the trend may be weakening and I need to be looking the other direction. You're going to find that it's very, very rare for a market to just make what they call a V-top, where it just peaks and falls off without any type of retest. And the only reason it would have done it this way is because it was probably a very thin market in the overnight. It looks like this bar right here was your test of the extreme. That's all the buyers could muster. But that's always something to keep a lookout for when you're anticipating a trend change. See, like here, we're getting a counter trend signal again. Now you need to judge, according to the programming says this right here is your test of the extreme. And so now prices are going to head to the hard edge. Well, the hard edge is kind of cozy, so I may not be too keen on that particular trade, because what could happen is there's going to be a bounce off the hard edge. Then we'll see a better test of the extreme, a better retest of the lows before the market truly tries to reverse and head higher. If I get this, if I get the market making a significant push against the low and then failing, then there's a very good chance it's going to try to head higher. And Peter's asking, what about the second leg? Yes. Okay. Good question. Excuse me just a moment. Okay. Whenever the market violates a significant support or resistance area, we can normally anticipate two pushes in the direction of the breakout, two pushes or two legs. The problem becomes identifying a significant swing point. Now, I try not to micromanage this kind of stuff. I try to go for the obvious. So if we're looking back here, you can say, well, there was a decent swing there. There's definitely a decent swing here. There's leg number one that broke the support point. You can always tell because there will be a reaction when that happens. So that's leg one. We can normally anticipate at least one more move in the direction of the breakout, and that would be leg number two. Let's take this now to where we are. So here was a significant swing point. Is that the low of the morning? No, but it's pretty close. It's still significant. I would not consider, well, I certainly wouldn't consider something like this. You know, here's an itty-bitty swing, and then here's another itty-bitty swing. I would not consider those significant. Just because the market broke that, well, and actually this one's a little bit more significant here. But I think you understand what I'm saying. If the market reverses and breaks, say, a little swing high like that, I'm not going to consider that a significant swing point. The significant ones are the ones that your eye is naturally drawn to, the ones that you don't have to work out. So definitely this one, that one looked like it was pretty significant. I would say this swing high is pretty significant if the market reversed. You know, go for the obvious ones, the ones that have at least a few bars going into it. Okay, so the market broke the swing point here. There's that little bit of a reaction. That would be leg number one. So now I'd be on the lookout for another opportunity to get that second leg lower. And it looks like that's what's happening right now off the hard edge. Normally, the first two legs of the move are going to be the strongest. But it's always hard to tell on the follow-through. This first leg was pretty big. And if you counted this as your significant swing, let me clean this up. So if you counted this point here as your significant swing, there's leg number one, there's a reaction. There's leg number two, there's a reaction. You'd already be on leg number three. And for the Raptor, 3 legs is pretty significant. You're probably only going to get 3 legs out of the move before we're going to see another test of the extreme, and then the market try to head the other way. And this happens over and over and over again. Okay, Ryman, I'll get to your question here in just a second. Okay, so Ryman says, I'm setting up the E-mini S&P on my other chart. I've set my Raptor to 4 ticks. I need to change my other chart. Hold on. Okay. So with the E-mini S&P, sometimes when the instrument is trading more than $10 a tick, or if its intraday activity is very light, we may need to change from the default settings to the alternate 446 settings. So the first thing you need to do is change your brick size. So you'll go to your data series. Oops. Okay. Oh well, I didn't intend to do that. Go to your data series and adjust your brick size to 4 ticks. After you do that, your clouds are going to look a little funny because they're still set at the larger size. Go to your indicator window. Find your Raptor version 2.0 and scroll down about halfway. You're going to find Cloud Setup and Hawk Bars. Your default Hawk bar is 6 ticks. You're going to want to change that to 4. Then you also want to change your 2 cloud sizes. Make one cloud 4 ticks and the other cloud 6 ticks. So there's your 4, 4, 6. If you're trading the 30-year bond, which trades at $31.25 a tick, you're going to need to adjust this even further. You're going to need to go to a 244 setting. So you'll have a 2-tick chart, a 2-tick hawk, and I believe a 2 and a 4 on your cloud sizes. The idea is that when it's all said and done, you want your chart to offer you some decent signals. Not that every signal is going to be a winner, but that when you print a signal, you can say, yeah, okay, there's a hard edge bounce that had some decent follow through. Here's a cloud crossover. Let me see. Okay, the clouds cross. There's a pullback. Yes, okay, that's printing correctly. No counter trend signal there. But you just want to go through a few signals and just make sure that the signals are printing correctly. The overall look of the chart should be a normal chart. I'm using air quotes when I say normal. And if you wonder what a normal chart looks like, just take a look at your NASDAQ with the default settings, mini Dow, crude oil, gold, the mid cap, practically any other market besides the E-mini S&P. And you'll see what it's supposed to look like. Well, we've wandered back down to the low of the morning, and a little bit of a reaction there. And we might actually be getting a little bit of a bounce off that. Bounced a little retrace and maybe another push lower. Right now, the sellers have control. But we're at the low of the morning, and this is where the buyers made their initial move up. So it's reasonable to assume they're going to try it again. Not much going on here at the moment. Piotr, oh my goodness, man, you must be a good typist. All right, here's Piotr's post. Oops. Okay. There's one problem, Eric. We can see everything on the left-hand side, but we don't know what will happen on the right-hand side. I think we need more insight from the left side as the bigger picture of what happened before and keep our significant resistance and support levels in our mind. For example, when we trade only the eagle, we got pretty good insight to what the market may do, but when we trade the hawk, we know practically nothing. Not exactly, I want to say that, but be honest, the best and the only signal that I would take is the first micro-macro crossover, because the rest of the signals could be fake due to trend and support and resistance. Okay, so I think what Piotr is getting at here is that we need to take the context into consideration. And yes, we most definitely do. You know, you can't trade in a vacuum, and I've said that before. You need to qualify all the signals. Like, for instance, I got to go back here a couple of days when the market was not trending very well, like right here. Okay, just because we get a number one signal or a number two signal, do we just take that signal blindly? Well, when you're starting out, yeah, you probably will, and you're going to rely heavily on your trade manager, on your risk manager component, to keep you out of trouble. So when the market whipsaws back and forth, you don't end up getting smoked. You don't end up wiping out your account. This is also a reason why I tend to keep a very liberal stop to start, because if I'm not sure of the overall market context, the last thing I want is to get into a trade and just have it churn back and forth, back and forth. So yes, you do need to pay attention to the overall context of the market. Does one tool do that better than another? Well, yes and no. I know a lot of people like to trade when they're in sync with the eagle. This was always Stephanie's big thing. She liked to only take trades that were in sync with the eagle trend trader. And that's what worked for her. And that's probably why the eagle trend trader got programmed into the Raptor filter, so that people could look at the Raptor and say, yeah, okay, this is the eagle. The eagle is bullish now, so I'm only going to look for buy signals. The eagle is bearish, I'm only going to entertain sell signals. That's one way to do it. The problem with that is your counter trend signal will never be in sync with the eagle. It's just the way it works. And that's okay too. If you don't want to ever take counter trend signals, then that's fine. Just make sure everything is in sync on your Raptor. To say the hawk signals are not valid apart from the first micro-macro cross is not entirely true, though. The 5 hawk signals that we look for all tend to be very reliable, and for the odd time that there isn't the follow through on the signal, of course we're going to rely on the trade manager to keep our risk at an acceptable level. But just looking here at this morning, you can see that, I'll go right here to the open. Okay, so the market opens here. We have a first micro macro cross here. We have a macro pullback here. We have a 4-arrow consolidation signal kind of completing here. All of those worked out. You had to, the first micro macro cross and macro pullback worked out earlier. The 4-arrow consolidation, you had to ride out the swing, which is what I did, which again is why I had my stop deeper. That came back with another first micro macro cross, and that had nice follow through. This macro pullback, on the other hand, did not. Then we got a first micro macro cross lower, a macro pullback. Yeah, I wouldn't consider that a 4-arrow. And now we're getting a green bar sell, which you could buy or sell. Actually, I might have been too quick dismissing this because we're only looking for a, no, it hit the break even, but it did not hit the profit objective. A lot of times, you know, when you're scalping, of course, you can get these small little moves. Stop it. Sorry, I'm a little OCD when it comes to this. There we go. So you can see that out of the 6 or 7 Raptor signals that we had this morning, only one did not work out. And if you were running a break-even trigger, you would have got tagged at break-even on that. So I think it's a matter of focusing on the quality of the signal. And, you know, I agree with you, Piotr. It's unnerving. You know, you look at the signal here, it's a first micro macro cross. I know I should take it. And I cover it down there, and it's like, oh, please, please, please. Oh, okay, good. And when these trades are unfolding, you know, it doesn't look like it's going to work out. But if there's one thing I've discovered, it's very often those trades that look the least promising that actually are the ones that work out the best. Don't know why that is. It's almost like the traders working behind the scenes know that, hey, if we make this trade look really juicy, we'll fool a bunch of people into taking it. That's why whenever I see the market expanding very rapidly one way or the other, let's say, you know, over the next 30 seconds, we just saw the market just take off like a shot here, just print bar after bar after bar after bar. Well, what's happening? Well, everybody's reaching for their buy market button, right? So for, you know, 20, 30 seconds, everybody is trying to buy into the market. And then why? Well, because it's moving really, really fast. And what inevitably happens after that? Right? The market tanks. Do you think that happened by accident? Nope. So, yes, context, very important. Stick with the high probability signals. I think that's very important as well. If you want to, you know, sync your signals, your other signals with the eagle, that's perfectly acceptable. And I think that was all of your question. And yes, you're right, Piotr says here, the hawk works much better in a trend situation than in a recovery situation. And you're going to find that's true across the board. When your signals sync, in other words, you get a buy signal in the hawk, you've got a bullish trend, a trend changeover, a buy signal in the falcon, you got a buy signal on the eagle, everything is going to work better. That is absolutely true. Ditto for the Raptor. There will be times, however, where you're not going to exhibit any discernible trend, and in which case, the hawk, because it's designed to pick up scalp signals, will still be producing scalp signals, even though you're looking at perhaps the eagle or the falcon saying, which way is the market going? It's a little bit of a trust factor, and I have to say there's no easy way to learn it other than just to go through your tools and look at all the signals and say, yeah, okay, there's a first micro-macro cross, that worked out. And yeah, there's a macro pullback, there's a first micro-macro cross, those worked out. And just go through and see how many times the signal works and how many times it fails. And I think you will be surprised, pleasantly surprised, at how well the signals work out, even when you think they can't possibly work out. And then after that, it's up to you just to have the confidence in the tool to take the trade. And I realize that's easier said than done. All right, boys and girls, we're back into a chop fest here. I think we hit the lunch hour skid. So we're going to button up the room here for this morning. We'll get back together tomorrow, do it all over again, and I will talk to you tomorrow morning. Bye for now.